Welcome everyone. Thanks for joining us today. We'll get started in about a minute or so. We're just going to let some more attendees join the webinar and get situated. Thanks for your patience. All right, welcome everyone. My name is Cassie Fortes, and I'd like to welcome you to How to Fix or Maintain a Healthy Credit Score webinar. Thank you all for taking the time out of your day to join us. Before we get into the meat of the presentation, I'd like to remind you all that this webinar will be recorded and emailed to you along with the PowerPoint and any resources mentioned today. Participants are muted upon entry, but if you do have questions, we most welcome them in the Q&A box located on your menu bar, and we'll try to address them throughout the presentation to make sure that we have time to get those questions answered. And before I hand it off to our subject matter expert today, I'd like to introduce May Sepan, SBTRC Southwest Region Director, to give a few welcome remarks. May?
Good morning, everyone. Thank you, Cassie, and welcome to our webinar today. As Cassie mentioned, we are the Small Business Transportation Resource Center in the Southwest region, and there are 12 centers alongside ourselves located throughout the U.S. We represent the states of Arizona, California, Hawaii, and Nevada. We are a funded agency out of the U.S. Department of Transportation Small Business Transportation Resource Center, and SBTRCs exist to assist small disadvantaged businesses in building their capacity to bid and perform on transportation projects, as well as professional service procurements. Our focus is on servicing these 4 states, although we work with companies located throughout the U.S. and in partnership with the other sister centers that I had just mentioned. For today's presentation, we are also partnering with Five Star Bank and also with the Minority Business Development Agency and the Minority Business Development Agency Export Center. And we're excited to have Mr. Say Chow with us, and we hope that this presentation will be useful to you. I know that fixing credit scores and preparing finances is a very important and relevant topic right now, especially with the tax season coming up, and also as we prepare for the rest of the year and getting a lot of people's resources and assistance lined up to support the recovery for the post-pandemic period. So without further ado, I'm going to hand the mic back to Cassie. Thank you for joining us today, and I hope that you have a very good learning session today. Thank you.
Thanks, May. And now I would like to introduce our subject matter expert, Yoon Se Chow. He's the Senior Vice President and Business Development Officer at Five Star Bank. Yoon, please feel free to introduce yourselves and tell us a little bit about Five Star Bank.
Thank you, Cassie. I'd like to thank the SBTRC for the invitation to give this presentation. I am a business development officer for Five Star Bank. What that means is I'm your primary contact, like the first person you would probably talk to if you came to the bank and said, hey, I need to do this or I need to do that. My job is really to make sure that you know, like figure out a way, the best chances for you to get what you need. So a lot of times I package, you know, your loan request. I try to put everything together in a nice, paint a good picture for the underwriter, so your chances are better at getting in. So don't be offended if I ask you too many questions. I'm just trying to make sure you can secure an approval. So a little bit about Five Star Bank. Like for those that don't know, Five Star was founded in 1999 by Buzz Oates and Frank Ramos. They felt that the area needed a relationship-based commercial real estate banking services that it was the area was missing. So they started it. We now have 9 branches from Chico to all the way down to Rancho Cordova. We have some locations in like the downtown area and Natomas, but our headquarters is in Roseville, California. All right, so let's go ahead and get this going. Cassie, next page, please. All right, so Cassie provided me with your pre-submitted questions. And I am on the next few slides, we should be able to answer all of your questions. So let's start, let's just kind of go through them. Number one, you wanted to know, how is a credit score calculated and what helps or hurts your score? Number two, how does multiple hard and or soft credit pulls in a short amount of time affect your score? Number three, if you have a social security number and employer identification number, does one score impact the other? When you apply for a business credit card, why do companies ask for your personal social security number, and what impact does that have on your personal credit rating? Can you freeze your credit score for your EIN or employer ID number? What cyber identity and security threats exist for EINs, and how can we protect ourselves against them? What are the main steps you can take to boost your credit score fast? And does credit fixing by other advertised service really work? All right, so let's go to the next slide, Cassie. All right, so for those that was on my previous presentation, you probably saw this slide. This was pulled from that presentation. I had a feeling that after that presentation, we were going to get a request to just do credit reports and things about your personal credit bureau. A few years ago, we did a colleague and I did a presentation to the optometric school in UC Berkeley, and all they wanted to know was like about the credit score. So I'm not surprised. All right, so let's start with your personal credit report. For those that don't know, there are 3 credit reporting agencies: Experian, TransUnion, and Equifax. And you really should know your credit score. You should pull it on yourself. It's the federal law allows you to get one every year for free. And the way it's measured is, I pulled this from Investopedia, and it breaks out as your payment history. So payment history, how you paid other creditors in the past, 35%. So that's the big one. The next one is credit usage. So like for instance, if you have a lot of credit cards, if they're maxed out, then it's going to show 0 availability. So what you want to do is kind of keep that below like 30% to 25% or lower, because that's 30% of your score. And the next one is the age of your accounts is 15%. So what you want to try to do is like, if you're younger, you get your first credit card or your first credit, and even though if it has like a small credit line, you may still want to keep that open because that's your oldest trade account. So the older it is, like your score gets better. And your credit mix, what kind? It's only 10%, but it's what kind of items are shown on your credit report, like term debt versus revolving debt. And then the last one is your new credit inquiries. So like when you apply for credit, that's another 10%. So all those things come together, and an algorithm is used that spits out a score. And over the years, like when I first started, when I used to have to pull credit reports on doctors, they would always ask me, how come my credit score that you have is lower than the one that I got when I was applying for a auto loan, for instance? And through my research, what I found out is there's different types of credit scores, even from each of the bureaus, and depending on where you pull it from, the scores can be different. And the way it works is some creditors put more weight towards other things. Like if you're like an auto creditor, then how you paid your other auto loans in the past may weigh heavier on your credit score, like things like that. So it's not an exact it's hard to give you an exact science on what to do, but things like how old your credit is and your inquiries. There was one of the questions that you guys had about soft pulls versus hard pulls. So when you apply for credit, it's considered a hard inquiry. So every time you apply for credit with a creditor or with a bank or whoever it is, it counts. You get a little bit of ding on your credit report. And how that works is the more established you are, the higher your credit score is, that inquiry is going to count less against you than if you're newer, your credit is newer, you're newer, maybe college student that just got your first credit card. If you're constantly applying for credit, like those inquiries will add up and they'll hurt your score longer. But the way the inquiries work is right away it may affect your credit score. After a few months, if your credit score should come right back up. So you shouldn't worry too much about those. If you truly need to apply for something, then go ahead and do it. You want to try to keep them together if you're shopping, because how it looks is it kind of looks like you're shopping, so it's not counting too much against you. But what you don't want to do is like constantly keep applying and applying, because what it looks like to a creditor is maybe you're getting declined somewhere, or you're really needing some extra money, and that's where it starts to look bad. And then the soft inquiry, it shouldn't count it against you at all, because the soft inquiry is basically you checking your own score, checking on yourself. So that doesn't count against you. The next bullet point I wanted to talk about was like term debt versus revolving debt. So what is a term debt? A term debt is things like your mortgage, your auto loan. Those are called term debt because there's a set term on when it'll get paid off. Revolving debt would be things like your credit card and your line of credit. Revolving because it revolves. You can use it, you can pay it down, and you can reuse it again. Whereas a term debt, it's set. The set loan amount, you pay that monthly payment until it's gone. You can't use it again. And I learned this when I was down in training back in my Wells Fargo days, where so what's the difference between a credit card and a line of credit? Well, what should which one should be used for what? So a credit card, because the rates are high, what you want to do is you put the shorter term stuff on that, like maybe supplies for the office, things like that, where you can pay off every month. Line of credit are things that you can carry a balance over over month. Maybe things like, all right, you have your you're a contractor and you took on this new job, but you have to buy all the supplies, you have to pay your people. You would use your line for that, and that you could kind of carry over because the rate on that is probably, a spread over prime that's pretty low, like in a 6% or versus a credit card where it's like in the 20%. So if you're carrying that month over month, then you're paying a lot of interest on. So those are things to keep in mind. If you know how to use your credit cards, you can actually take advantage of, if you have any incentives like points. The only way those points make sense is if you zero it out every month, because if not, then you're earning points, but you're paying interest. So it doesn't, it ends up maybe you're paying more than what you're getting back in points. And like I said, the federal law allows you to get your credit report once a year. And you can get that at www.annualcreditreport.com. And I've also noticed like on my apps, like I have a Wells Fargo account and I have like a Chase account. On those apps, there's actually a place where you can track your credit score, and you can pull your credit score. I think monthly they'll let you pull one every month, so you could just kind of tap on that and get your credit score. All right, so can we go to the next page, Cassie? All right, so now we come to the business credit report, and I'm glad we had those questions because my on the personal side, it would have been really short. So the question about the EIN made me have to go through my memory and do some research for you to pull up, like what is an EIN, how's it work? An EIN is basically like a social security number, but for a business. And the IRS tracks your personal tax returns with your social security number when you file your EINs for like your business filings. So your business tax returns, even if you're a corporation, even if you're like a sole prop, you can also apply for an EIN, and you can apply for one fairly easily. You can go to the IRS webpage and fill it out, and you can get an EIN then. So there are some key differences between a personal credit report or a credit score and a business credit score. Generally, your personal credit score starts at 300 to 850, and a business credit score often 1 through 100. And businesses are tracked by, the name of the business, the address, and your EIN number. And there's several credit reporting agencies out there, but the three major ones are Dun & Bradstreet, Equifax Business, and Experian Business. And Dun & Bradstreet's, every bank that I've worked for, we've used the Dun & Bradstreet. It's a DNB report. And they use something called paycheck score. And a paycheck score, or I'm sorry, not paychecks, Paydex score. Sorry about that. It's a Paydex score. And the Paydex score, it measures when you pay on time, but it also measures like how quickly you pay. So for you to get like the highest score, you got to pay quicker. I don't know like if that's the best for your business, because you may need to use the full 30-day term because you're waiting for your vendors and your customers to pay you. So you may, a score of 70, 80 versus like a 90. I haven't seen 100 before. It's not gonna kill your deal, because we're like I said earlier, we're really looking at multiple things. Your credit score is one piece of the puzzle, your business credit score is another piece, So I wouldn't worry about trying to pay so quick, because if you can hold cash in your business for longer, it's working capital for you, right? So you want to try to kind of time that, but what you don't want to do is pay late, though. You should always pay on time. So let's move on to the next slide, Cassie. Okay, so we wanted to talk about well, how do you protect your EIN? How do you keep that safe? And just like your social security number, you should go out of your way to protect that. Like documents, if there are documents with your EIN that you're not using anymore, you should shred those. You should protect your company information when you're applying online. Like a lot of times, not any creditor that you apply for where you have to submit tax returns, your tax returns will have your EIN number. What you want to do is either um, um, upload those to a portal. Usually a bank like Five Star, we have a portal where you'll get an invite, and it's it's protected and it's secured, where you upload all your tax returns. If you cannot, if where you're applying for doesn't have a secured portal to upload things, what you can do is make sure your PDFs are password protected. So when you send that through, whoever's on the other side can't access your tax returns without the password. A lot of times, like when a customer sends me a PDF of tax returns, I tell them to either text me their password or give me a call to give me the password, and not to put it in email. Like our emails are pretty secure, but your email, like if you're sending it for your personal emails, that can be hacked, and you want to protect your EIN number. And those are some best practices for you. And then one of the questions specifically asks, can I freeze my business credit? And according to Experian, you can't. There's no way to freeze it, and the laws regulating business credit versus consumer credit are different. So you really have to protect your EIN. Okay, Cassie, next page, please. All right, so some more questions. These will address some of your other questions. So I pulled this from the IRS website. No signs of identity theft. So how do you know? How do you know if someone's stolen your identity? Like your EIN number can be stolen, and how do you know? So one of the ways is if you can't file your return because it's saying it's a duplicate, someone's already filed under your EIN or your social security number, that's a red flag. If you get a rejection notice for a routine extension to file tax returns, that's also one. And if you receive an unexpected transcript, like the IRS sends you a notice for something that you didn't apply for, that's also a red flag. I think what these try to do is they'll use your EIN sometimes to try to apply for credit. But the big one, like there's a big problem of is like they will try to file your taxes, and if there's a refund, they'll try to get that. And then they also what they call a W-2 scam, where they would then use your EIN to create fake W-2s to try to get tax refunds, or they'll try to get your employees tax refunds. And if you ever come across something like that, then there's a form online where you can apply, where you can fill out, or you can also call that 800 number there. And there's even an email address where you can send to dataloss@irs.gov. So I think that covers my slides, but let's go back and answer anything that may not have been covered. So as far as we talked about your soft pulls versus hard pulls, one of the questions was, when you apply for a business credit card, why do companies ask for your personal social security number? And what does that have on your personal credit rating? So like I said earlier, there's multiple pieces to the puzzle that like, for instance, if you're applying for a business loan, a lot of companies I work with are the small business, the small to kind of lower middle market, like smaller businesses. And those small businesses are closely held companies. So a lot of times all you have is just your personal credit. Like when you first start out, you may not have a business score. Just like when you first started out, you may not have a personal credit score. I remember I went with my brother-in-law and he was trying to buy a car, and they pulled him up and they're just like, there's nothing, we can't find anything on you. Not having a score is actually better than having bad credit. So, you can build on, like, if you don't have a personal credit, like you can start, you can start somewhere. There's easy ways to kind of, on the personal side, if you're trying to just start out and you don't have any personal credit, easier things to get, maybe like a gas card for a gas station where you can get gas, and after a while that starts building your credit profile, and you can start getting other things. Another way is maybe at your bank you can apply for a cash secure credit card, maybe put like $250 to secure your credit card for $250, and you use it to buy things and start paying on time, and your credit would start to grow, and you'd be able to get other things. And that'd be the same way on the business credit side too. Like when you first start out, maybe your business credit profile, there's nothing, right? So you're like a ghost. What you can do is you can apply for a business account, start with your EIN, you get your EIN, and then you go out and get a business account. With the same thing, you could get a secured credit card. Other ways is when you get your EIN for the Dun & Bradstreet, there's a DUNS number, and you can actually go to their website and apply for a DUNS number, and that will track your business activities. Not every creditor, not every vendor reports on business, so you can also check your business credit score just like you check your personal credit score. Like you can, it'll cost some money, but it's worth it to know that there's no bad information or mistakes on there. The worst thing that can happen is there's bad reported mistakes and preventing you from getting what you need. Okay, so let's go to I think the other part of the question was, what impact does it have on your personal credit rating? Just like anything, like if you apply and with a creditor and they pull using your social security number, it's a hard inquiry on your credit report. So like we said earlier, it would then maybe take take your score down a little bit, but shouldn't take that much. I've seen maybe like 15 points down, or like depending on your history and the strength on your credit profile. And then I think we answered number 5. Number 6, cyber identity. Yeah, we also addressed that. And then number 7, what are main steps you can take to boost your credit score fast? Well, I think there's no magic bullet, but if you pull your credit score, like if say for instance, if I was to pull your credit report and I saw like you had a recent 30-day late, that would impact your score pretty significantly, maybe like 30 points, something like that. Or if you have like a collection report, like sometimes people don't know about, like I used to always see these medical collection things like $30-40, but it'll bring your score way down. So what you want to do is if there's any wrong information, that's why it's important that you kind of monitor your credit. So what you can do is contact the credit reporting agency, or if it's something that like, so you contact them first, get any mistakes removed. If there's a small collection report you didn't know about, what you want to do is then pay it, and then get that documentation and show it to the credit reporting agency, and maybe they can take that off. Like taking things off of your credit will boost your credit score. And if it's just a recent 30-day late, took your credit score way down. You just got to kind of wait for it to go up a little bit. And when you fix, I've seen where mistakes are fixed, and then you may have to wait 30 to 60 days because it kind of reports like 30 days after. So once that happens, maybe you can have your creditor repull, and your score should go up. And then the last one is, does credit fixing by other advertised service really work? That I don't have experience with, and I haven't talked to anyone that has told me that they use someone to help fix their credit. I think all this things that we talked about reviewing your credit report, going through, seeing if there's mistakes, getting those things fixed, and adding, credit lines to your credit report. Like, it's good to have a few credit cards, maybe like have some loans on there, your auto loan, and as times passes, like your credit score just goes up. And with the credit, like credit cards and credit lines, you want to keep those, the availability as high as possible. So like, for instance, if you have a single credit card and you use, let's just say it's $1,000, you use 500 a month, that's 50% utilization, right? But if you have two credit cards at 1,000 each and you use that 500, then it's like a third of that. So things like that you can do to boost your credit score. So that ends my presentation. I'd like to open up to additional questions.
Thanks, Yoon. Fantastic. So we do have some questions in the chat, and I'll just pan over. Did you want me to get to this slide, or shall we hit this one after?
Oh yeah, I mean, that one I provided. So those are all links that I pulled my slides from. So anyone that wants to want more information that maybe wasn't covered, they can click into it and get more information.
Awesome. So we'll be sharing this with you in the PowerPoint after the webinar. So just keep that in mind. And as far as questions, we can just go over to the Q&A.
Okay.
So we do have one question from Sonia. Can you please speak to the weight of your credit score when applying for a small business loan?
Great question, Sonia. So when you're applying for a business loan, your credit score can make or break it, because sometimes there's a hard line on where your credit score needs to be to just even qualify, right? So I'm seeing like 680 at some banks are 700 FICO score to just move forward. If they pull your credit score and it's below that, sometimes you can make an exception, but you have to kind of explain what happened. Like if you've handled your credit really well and recently you just missed one payment and that dragged your credit score below the minimum, you might be able to explain that, and that might not, you could kind of move on with that. I think another best practice you might want to do, and I do that with all of my credit lines, is just set automatic payments. I just set it up for automatic payments and just not have to worry about it.
Awesome. All right, so the next question, do lenders and creditors look at all three credit reporting agency reports and credit scores calculated using the information from each before approving a credit or loan application? Yeah,
this would depend by creditor. I know home mortgages, they always look at all three, and they usually take your middle score. On the business side, it depends. It'll differ by bank. I know here at 5 Star we do look at all three. Like previously at the bank I was at before, we just looked at the Experian report. Sometimes if the Experian doesn't pull up, then maybe we'll pull up the Equifax, things like that. And rest.
And is there a reason why there would be a difference between the different reports? Or
because they have different formulas on calculating the score, and then Some creditors, they may not report to one bureau, maybe they report to another one, so that's where your score can differ.
Great. Awesome. All right, moving right along. The next question, can I use a credit score as leverage for a lower interest rate when seeking a loan or line of credit?
Yeah, I think that would depend also. Like I used to work for, there was a bank that I worked for where it was actually tiered. So if your credit score fell within this tier, you got this rate. If it fell in this tier, you got this rate. So if you, the higher the score, generally the better your rate would be.
Awesome, thank you. Okay, so next question is from Faith. Is it better to have many, let's say under 10 credit cards that you don't use, or is it better to close out some before opening new lines of credit?
Yeah, I mean it almost depends because if you have like I was saying earlier, like if one of your older credit cards had like a small credit line, instead of closing that out, you may want to keep that because that may be improving your credit score. And you want to keep at least I don't have a magic number, but maybe like 4 or 5. Like sometimes if you have too many, like you'll have a bunch of like credit lines spread out. What you can do is, maybe close some of those and get one larger line, and that may be more convenient for you. Like instead of having to move it around, you just use one card or one credit line that covers everything.
Awesome. Okay. So I think another anonymous question, what about working with a credit repair company?
Yeah, so I don't have any experience with that, so I don't know like what exactly they do to try to boost your score, but I would start with trying to do some of that yourself, and if it's truly like you really need outside third party help, then maybe then engage. But a lot of the things you could probably do yourself, and you can find a lot of information like on the credit reporting agency webpage just on how to boost your score too.
Yeah, and like you mentioned, it does take time.
Right.
So just be patient and try it yourself. And then of course there's resources like Yoon and other agencies that can help you at least understand the things you can do before reaching out to someone else. So yeah, appreciate that. And then we have one last question. Feel free to keep bringing them in. I'm just going to quickly, before answering this question, launch our poll. This really tells us how we're doing. Are we bringing value to you? What do you want to see next? So we really appreciate if you can take a few moments of your time to just complete the 2 questions. And so the last question I have here in the queue from Bree, I'm in a really bad auto loan deal. What is the best way to get out of that now that my credit score has improved? While trying to refinance, they say the loan to trade in value is too high to meet their standards.
Oh, that's a tough one. So are they saying like the value? So it sounds like they're saying the value of the car is lower than what the loan amount is. And that may have happened because your rate is higher, right? I don't know if, yeah, for something like that, I don't know if you want to try to maybe inject some cash into it to bring it down to where you can get the lower rate. If you're in a position to do that, I don't know if you have maybe access to a home equity line that maybe you could tap just to bring it down to where they need it. Those are some of the things that I can kind of that comes to mind.
Awesome. So she said, I can do that. Thanks. And Bree,
Oh,
feel free to
sure.
reach out to us. I have my contact information here on the next slide. And of course, we'll be sending out the presentation. So you'll also have Yoon's contact information if you need that as well. But let me see if there's any more questions in the queue. It looks like we'll be ending quite early today. Not a problem. We want to make sure that we're providing good value to you. So please feel free to reach out to us if you do have further questions. Yoon's information is also in the PowerPoint, so be on the lookout for that follow-up email. Yoon, is there anything else you'd like to add or close for this webinar?
Yeah, I mean, I ran through those bullet points pretty fast. Like sometimes I've been doing it for so long that it makes sense to me. But if anything's unclear or anyone needs help with anything, then feel free. I'm easy. You can easily reach me at email or by phone. Happy to try to help you.
Well, thank you so much, Yoon. It's been a pleasure, and I know we'll be seeing you soon on some more webinars, whether that's from us or from other programs here at the Chamber, but we really appreciate your collaboration and hope that this is of value to all of the participants here. We want to make sure that we're adhering to your needs, and the best way that we can do that is by you telling us what it is that you need or what you're having concerns about. I'm sure we have resources in one of our programs to help you. So thank you everyone for joining. I hope you have a great rest of your day and week. Stay safe out there, and we will see you in the next webinar. Thanks so much, everyone. Take care.
Bye-bye.